so with that, let me move on to, I gotta see what I'm moving on to here. So we're going to move on to Will. So Will, I'm going to hand it off to you and get you going. So there you go.
Okay, thank you, Mark. Oh, there we go. Show my screen. Yes. Screen of monitor too. All right. Hopefully. Oh, there you go. Not what I wanted to show, but there you go. So just to talk about what I said last year, I was really expecting last year that the markets were going to be breaking out from the consolidation we'd seen the previous couple of years, really, and that didn't happen. So big failure on that prediction, and I talked about continuing to use the minimalist approach to trading and also diversifying into more stock swing trading using options, which I did not do. Just got distracted with other things and never really put my plans in place. And you know you shouldn't trade if you don't have a plan, right? All right, so for 2012, I thought I'd actually try and make a scientific prediction of where my favorite markets were going to go. And for me, those are crude oil and the Russell. I swing trade the Forex, but my heart is really with the futures, those two in particular. So for this task, I decided to use all of the tools available to me as a trader to help come up with an accurate prediction of what was going to happen next year. And, you know, we all have these tools at our disposal. It's how we use them that makes the difference. So here goes. For the Russell E-mini, the one thing that you'll notice when we look at the chart in a moment is that the rally that started back in 2009 after that huge drop at the end of 2008 is weakening. And we're facing some really strong resistance up around the 900 level, a little bit below that, which we're having a hard time breaking through. The rallies we've experienced, they're really weakening when you look at volumes, whereas the declines that we've seen have been strengthening. So here we have on the top, that's a monthly chart of the Russell, and on the bottom down here, that's a weekly chart. And I want to call your attention, when you see something like this, actually, let me go to the trade station so we can look at the full chart. All right. This, by the way, is the Russell since 2002. So you'll notice I was talking about that strong resistance at below 900. That's up here. And we did have an attempt earlier this year to break through it. We broke through this previous high briefly, but then immediately took a dive again. So what I wanted to point out is, look at these things. Look at, this is a nice big breakout bar. We took out this previous swing high that we had in the Russell back in 2010. But compare the volumes. The volume on this breakout is truly anemic. I mean, there's no strength behind it. Compare it to the volume back then, and you'll see that it's actually significantly lower. So we have been moving up. And, you know, volume isn't always the best indicator. Actually, if you look down here, this is back in 2009 when we had that recovery from the bottom. We had a very nice uptrend going, but it was on rather anemic volume, and volume kept weakening as price moved up. Then you look at the strength of the declines, and here we're taking out a couple of minor swing levels over here. We didn't quite break this swing level, but the volume was truly astronomical, so a lot more strength on the moves down than we have seen on the moves up. And here we are bouncing back up. We're going to take another shot at breaking this high. You know, we're still under 900, but look at volume. Look at what it's doing, especially on the bars on the months that ended higher. Now this last one is January, and we still have a week to go, but you can already see for the 3 weeks so far, anemic doesn't begin to describe this market. This is moribund. So going back to the chart over here, on the weekly, and this essentially encompasses all of last year, we have the same phenomenon. We have some higher highs that we're setting, but this most recent weekly high, which took out this earlier swing from back in October, volume is pathetic. So what I'm seeing for the Russell is I'm really going against what I think is the majority of opinion here, but I'm seeing a decline coming again for us. And I think this will be a fairly major decline. We're not seeing any force in the moves up, and we're seeing a lot of strength, a lot of force in the moves down. So my prediction is we're going to see a 15 to 20% decline in the Russell. I think we will be testing this level over here from back in early 2009. And that's my prediction, and I'll stick to it. Crude oil, similar situation. We've been consolidating since 2009. It's really a coiled spring. I expect a breakout. I'm not positive in which direction this breakout will happen, but I do notice on crude oil the same thing we saw on the Russell, that the rallies are weakening and the declines are strengthening. So here you see a good example where we had this swing high earlier. This was back near the beginning of last year, and we took out that swing high, but you'll notice the volume compared to the volume back here, much lower. And then on this swing low we just created, where we took out this earlier low, the volume was also higher, not much higher. This had been a pretty powerful bar, but it had been higher. And yes, we've continued to climb a little bit, bouncing back, but again, pretty anemic strength on the increases. This is on the monthly chart. We see essentially the same phenomenon on the weekly chart, and again, this is most of 2011. Also look at the OSOB indicator, which for us is, when we use our systems, it tends to be a confirming indicator. On the monthly, it's barely gone positive in the last couple of years. So a lot of weakness in this market. All things being equal, I expect that we're going to see a breakdown this year, a breakout this year. My chart reading tells me it's going to be to the downside, which would be a wonderful thing because I need to fill my gas tank later this week. But we'll see how it ends up. There are, of course, all the caveats. And the caveats are the big ones, global events. We've already talked about Europe, Iran. You know, what happens with the price of oil is going to have more to do with what happens with Iran than it does with what we see on the chart, quite frankly. China, which has been an engine for global growth, is slowing down in its growth. So what's that going to do to us? The presidential elections, I've looked at enough charts around political events to know that they can wreak havoc with any kind of analysis that you make. Rumors fly, accusations fly, numbers get thrown around, and anything can happen. And finally, Murphy's Law, something is going to happen that we haven't even considered, and it's going to move the markets in unexpected levels. So those are my predictions. I expect the markets to decline on the Russell and on crude oil by approximately 20% for the next year, but I could well be wrong. Because I don't rely on these long-term predictions as to what I do with my trading, I really don't care. So I'll tell you what I'm going to do as a trader. My trading plan for this year is the same it has been. I focus on day trading. That's my big thing. I love day trading. I'm not too keen on swing trading, although I do it. And I definitely don't position trade. My minimalist day trading plan I've gone over in several presentations, so I'm not going to go through the details, but essentially it focuses on trading during the best trading periods of the day. And that's a 30-minute window on crude. It's a different 30-minute window on the Russell, and a third 30-minute window on soybeans. It's a wonderful approach. It's very easy to trade, and the results are a lot more consistent. And for swing trading, I'm swing trading the UST. Essentially what you see in the UST Owners Club nightly update, that's what I trade. Why don't I trade the Keltner bells? Well, because I do the UST nightly update and I can only focus on one thing at a time. And finally, I'm just going to say, if you want to be successful, worry less about long-term predictions and focus on what you're doing day to day. Make sure you have a tested trading plan that you have confidence in. Maintain your focus and your discipline in executing and following your plan. So that's it. Thank you very much.
Thanks, Will. Appreciate that. I think a good point there is made that it's a lot of fun to make the predictions and see how they turn out. The good news is you, me, etc. We can be completely wrong and still have a good trading year. So this part is fun, but it doesn't impact obviously what we ultimately do as traders. So let me go ahead and hand this off now to Bob.